Okay, we're going to move on nicely now to OTAs, direct booking, and the challenges that owners have when it comes to the distribution of rooms. And I'm delighted to bring up Filippo Sona, for head of hotels from Colliers International in the region. Filippo is going to be moderating a panel with Emily Asander, global head of Triptease on the development side. Emily? Good to see you, Emily.
Good to see you too.
Excellent. And then we've got Terry Kane, head of travel and auto for Facebook. Terry, thank you for joining us.
Thanks.
Great. Filippo, I'll leave it to you.
Thank you, Jonathan. Thank you very much, ladies and gentlemen. It is an honor. And let me go straight into the subject. We invested heavily in researching the topic of the unconventional truth behind OTAs and hotel companies, because we often hear, one side of the story, but now we're looking at the other side of the story too, the two sides of the coins. I'm surrounded by big giants, Facebook. I need to watch it. Statistics. As of December 2017, the Middle East is officially the market globally with the highest online travel booking by OTAs. 75% of the online travel space is booked via OTAs. Massive. Followed by Asia Pacific at 72%, Central Europe at 69%. Eastern Europe is 71%, and North America 51%. So huge numbers. Another statistics. On average, OTAs spend 47% of their revenue into marketing and new technology, whilst the highest spending from a hotel chain is 7.1%. So you can see the gap. So we're going from billions of dollars to few millions. So having said this, we see the industry that are moving towards a tougher environment, a tougher landscape. Recently, the news on Expedia seeking multi-source channel agreement, so they can display on their site rates not only from hotel chains, from any source. So the question I have, and the balance of powers. On one side, you have OTAs, which we argue that they are taking everything. On the other one, there is industry expert that's saying, are hotel company able to price correctly, rooms on OTAs or on the digital space? And therefore, the detailed question is, are we talking about rate parity or rate integrity? Alison.
Hi. It is a very interesting question, and I think there's not a one simple, fast answer across, is it a question of rate parity or rate integrity? In fact, it's very different when you compare the regions and the type of hotel groups. For example, in North America, if you're looking at Hilton or Marriott, the OTAs are often very respectful over their clauses in parity agreements, so they don't often undercut them. What they do, and the problem that the big brands have, is how they actually retail those rates. So OTAs, for example, may often not declare tax until right at the end of the customer journey, and by that point the consumer's already filled in their details and it's too late. But the OTA does win the booking because the consumer believes that would be the best rate for them to buy in the beginning. If you move over to Europe and the Middle East, what we're seeing there, the issue is fundamentally an undercutting problem, whereby OTAs, what we're seeing is a number of different trends in the ways OTAs actually undercut the hotel's direct price. For example, and just to put it into a bit of context, what we do at Triptease is we help hotels increase direct bookings, and we do that by showing things like rate transparency, so OTA comparison on the hotel website, And the way we do that is by integrating our code and script onto the hotel website. So that means that we actually collect loads of search data, including the length of stay, how many people are staying, when they're searching for, and things like that. And in terms of the trends that we've actually seen, it's really, really interesting. So what we've seen is, first of all, across the board, when an OTA is out there undercutting your hotel's direct price, the conversion rate goes down on average 34%. That was actually taken across a piece of data which was 300 million rooms and rate searches on websites, hotel websites. So what that means is just by getting in parity, hotels can significantly increase conversion to begin with. A couple of other really interesting trends that we've seen in terms of when OTAs undercut hotels is they're more likely to undercut the hotel if the length of stay being searched for is between 10 and 14 days. So what the impact of that on the hotel's direct bottom line is that they are going after your most lucrative customers. So these are the customers that you want in your loyalty programs. They're the ones that are going to be spending a lot of time if they're on holiday. So it's a really big financial impact. I mean, and another trend is that we've seen the further out the consumer books, so your very considered buyers, the more likely the OTA is to undercut the hotel. And so what that's saying is it's not just an immediate impact, it's a perpetual issue which is affecting 12-month budget cycles. So from that respect, it puts hotels in a really tough position. So hotels really do need to get visibility over this. Now, on the other side, when you're talking about rate integrity, do hotels have, are they sophisticated in terms of actual pricing? I think it's really difficult for hotels to get real visibility over what their prices are doing around the web. For example, I can go on for ages, but
let's dig deeper, because you brought up some keyword, undercutting, going after only the lucrative customers. But with these multi-source channel agreements, you license an OTA to effectively source rate, taking your wholesale rates, display them there. So the subject of rate parity is becoming increasingly fragile, under pressure. So my question is, if you don't price it correctly and you really know, across the border, you're going to end up creating, easily defining a complete mess. So you're confusing the consumer even more.
Yeah, but it's not necessarily the hotel's pricing incorrectly. It's what happens after that. So often the OTAs will retail it differently. So they'll package it up as something different, which means it looks more attractive than what the hotel is doing. Another great, and OTAs are just fantastic at the way they sell. They're conversion machines, and they have billions of dollars worth of marketing spend to put into displaying rates which make it look better than they would on the hotel website. For example, if you look at Booking.com or Expedia or anyone, won't name names, you will see, if you go down, you type in a country, whatever, you get a list of hotels, you'll see a rate slashed out in red, and then a cheaper rate beside it. Now, to the untrained consumer's eye, that looks like they're offering a big discount and they've got the best rate, and that could be the hotel's rate slashed out. But in reality, what that means, if you hover over it and look at the small print, that means that that's just the cheapest available rate within a 30-day window of the dates searched. So what they're doing, they're just being incredibly clever about how they retail, and that is the challenge for hotels. So what we do is help hotels get on a much more even playing field by educating them on what they can do on their hotel website to make sure that when that consumer lands there, they convert them.
But let's move across the more controversial side of things. And in an earlier conversation, me and you, you brought up a fantastic example, talking about this hotel, not necessarily because this is the case, but just as an example. When let's play devil's advocate, when we're talking about pricing correctly, please explain your example. Tell the audience what was your views on pricing correctly.
Yeah, sure. Look, and this is obviously a personal opinion. It's not necessarily a Facebook stance on anything to do with ADR, rate parity, or integrity. But you have almost a fragmented position within hotels. You have a a operational team that's responsible for making sure that the hotel is full, it's running, restaurants are full, that you're getting the ancillary revenues from every guest that comes through. And then you've got the science team, the revenue managers, the marketing teams, et cetera, that are responsible for driving the highest ADR and getting the most profitability or margins at the time of booking. Those two always don't marry. A general manager with an empty hotel or a 50% full hotel is not necessarily going to be overly pleased at a higher ADR of 10% at a 50% full hotel. So there is this meeting of minds of the science and the art of hospitality, which I think has yet to find its place. And I think the technology is certainly providing a good part of that challenge as well as that opportunity, and the OTAs and meta search companies are two fine examples of it. I'm hugely surprised at the volume of this market that is coming through OTA bookings. It's just absolutely phenomenal. But you have to ask, the reason is, why is that happening? And you're not dealing with a travel company. You're not dealing with an OTA necessarily. You're dealing with tech companies. You're dealing with giants. You're dealing with tech companies that get technology. They understand that they're the Amazons, they're the Facebooks, they're the Apples, they're technology companies. And these guys are focused on science, and they're focused on the science of every single decision. They're focused on the science of what happens on that device that every single one of us holds in our hands every single minute of every single day, the mobile phone. They know what's happening on the mobile device. They know what's happening with consumers. They know what's happening at the time of booking, when, at what stage, to make more of an effort in terms of reaching and talking to a consumer. And that science is just not within the hospitality industry to that degree, to that level. And I think that's a significant challenge. And the reason then the hotel companies look at OTAs, and rightly so, as guaranteed to fill hotels, or at least more guaranteed to fill hotels, is because they're really, really good at doing it. They're phenomenal, and they're easy to do it. So if they're easy to do it, and your bigger guarantee of them coming through and filling your hotel, of course you're going to revert to it, even if it does mean a deficit in terms of what you could get directly through your own sites. Now, is that right or wrong? That's a whole other question, but that's the reason why, is that they're very, very good at what they do. And consumers as well. I mean, we're all consumers as well as experts within the industry. Whenever we go on our own leisure trips or business trips, is what do we revert to ourselves personally when we're booking that room? We'll all go to OTAs. It's a very simple fact that we ourselves, as experts in the industry, go to OTAs to book our own hotel rooms. Why? Because they're very easy to do it. So you got to ask the challenge, beyond the parity and the integrity in terms of the pricing, is what's the fundamental challenge that hotels, either corporate or within the hotels themselves, have? And look, it's a mixture of things, but certainly the understanding in terms of what is possible on other channels without needing to become an e-commerce company themselves, and utilizing third parties which derive alternatives to what's eating up their margins, or stay with it and accept it and work on ancillaries outside of that. So there's lots of different scopes to this. So it's a beauty and a beast.
I want to build upon something that you brought up about influencing buyer behavior or going after the lucrative clients. And with influencing something you guys do very well, indirectly, I would say, you don't oblige anybody. It's all our choice to go onto Facebook or not. But in a recent video that we published here for the AHIC, and I stated that rate parity is a nonsense, as a concept, because it hindered the ability of OTAs to make more money and for hotel companies to make higher average room rates. But not necessarily for how you do things. It's on the fact about the level of indirect influence that technology can have over the consumer without being in front of them. You just in that. So the question I have for you is, is there an argument to support that buyer behavior can be totally influenced with technology? So can I direct this person to book same hotel they would have booked yesterday, but at a higher price?
It's a great question. And look, I think you need to take a step back from this and ask, what is the value of brand? And I think the value of brand is hugely missed, particularly in the revenue management world where all your focus is just filling the hotel at a certain period of time, whether it be short term or medium term. And what's the value of brand in maintaining a rate which people are willing to pay? And whether it's beautiful hotel like this, people will be willing to pay 30-40% more than what's available in the market because of the value of the brand. And that comes down to, well, what is brand within hospitality? And brand within hospitality is not the logo and the images. They certainly play a part of communicating the brand, but it's the experience when you walk into the hotel. It's the experience and the feeling of the room. It's the experience and feeling of the staff. And it's, do you walk away with a smile on your face at the end of it, or do you walk away, angry that you paid 10% more than the booking, for booking on a very channel? But I think the one thing that has to be brought to the forefront is value. So what is the value of the brand, regardless of channel? But then it's a vicious cycle. You will make people angry if you're not making sure that there is integrity and parity across all channels. If I'm getting exactly the same experience for a hotel room, and the brand is, as expected, and the quality is as expected, but I'm ending up paying 10% more just because I decided to book through one channel or another, that's just going to cause anger.
Taking the notion of value into a different context and talking about what we were discussing earlier that you were horribly against, and it breaks my heart, but we are proposing dynamic commissioning. What is the notion of dynamic commissioning? There is a hurdle rate of a minimum and a maximum rates. And at these minimum rates, let's say 20% commission. For every $10 or to be decided, I increase your commission because we believe in our firm that the power of technology can influence an individual to pay more for what they want. So customizations of products or nano pricing. And so the higher you book, the higher price you book with me, the higher your commission. Capped at 35%. Above 35% is economically unviable for any reason, because I will make less average room rate, I will make at 20% at a lower price. What's your views on this?
I agree that in some instances hotels can be leaving money on the table, and therefore they need to become more intelligent, and slowly they will in time become more intelligent about how they actually market to consumers to make sure that they get the highest value. What I fundamentally don't agree with is OTAs charging any more commission than they currently do. And the reason why is if we take this idea down the route, which you're taking it, which is we give OTAs even more commission because they're already getting a set fee. So the larger the booking, the more money they're getting anyway, because it's a percentage of that stay. If you give them even more commission, we get into this downward spiral where OTAs become even bigger and bigger and even more powerful, that they're getting more money to invest in their marketing campaigns, which means that they're getting more money. They already have billions of dollars worth of marketing spend to convince the consumer that their rate is best. And at the same time, they're enforcing hotels, saying, you cannot list a cheaper rate available on your website, but at the same time, I'm also going to convince the consumer that our rate is best because my marketing budget is billions of dollars and yours definitely isn't. So I just think it's that the danger from a consumer perspective is that if everything moves over to the OTAs, which is in that direction because they're getting even more powerful, that actually isn't beneficial to the end consumer, because the reason why direct bookings are also so important to the hotel is that it allows the hotel to get that customer data so that they can actually create a much more personalized stay. The hotel can also really understand the people that are staying at their property, so they can understand what their preferences are, what they really like, and therefore they can actually create a much better experience that is tailored to the people that are staying at their hotel. So fundamentally, I think that's a terrible idea, and I hope it never happens.
So let me play a bit of Steven Sakur hard talk, response.
Okay.
And let me challenge you on this. And the trade-off is no more rate parity, free market. But Mats is not an opinion. $100, 20% commission. You OTAs get 20, I get 80. At $130, you get $45.50. My average room rate or gross, 84.5. So I gain $4.50. They gain double their commission. But there's a free market. There's no more rate parity. What's your views on this?
Well, I think
I'm trying to calculate what you just said.
I think it's exactly, it's going back to what we were saying about what is the value of the brand, how much money goes into actually selling that hotel room. If hotels can't be eroding their profit margins simply to get into a rate war. And if the brand is, if they're investing in making that sure that stay is really personalized and amazing, they need to sell it. They can't keep going down. Equally, they need to get the fair rate. I just don't think that would work.
But look, I think taking it one step back to the previous comment that you made about nano packaging or whatever you referred to it within the industry, and airlines have done this, phenomenally well. They get a base rate for your flight, and it's not the same, and I fully understand that. But you get a base rate for your flight, and then you build your flight from that base rate upwards, according to your needs. And look, hospitality is not new to this, and has certainly been doing this in packaging. It's just not as easy from a consumer standpoint in terms of building what you want as an individual. And look, there's some hotels which are doing it. I stayed in Riyadh last night in a loft hotel, and I thought that was fantastic. It was the first time staying in a loft hotel, and I built my own package based upon my needs. Airbnb, it's a big beast out there now. Airbnb is enormous, and I think you should be very conscious of what Airbnb offers versus, traditional hospitality. To build your own package according to exactly your needs. I stayed in the Champs-Élysées a couple of months ago in a 3-bedroom apartment, which was pristine, phenomenal, 5-star apartment for at least half of the rate of a 5-star hotel. And then I've got Uber for my chauffeur, and I've got Deliveroo to deliver my room service way beyond any kind of menu that you could ever offer me in a hotel. And it's right to my door, and it's paid by credit card, and it's probably cheaper as well. So all of this nano packaging is a reality, and it's a reality which is, whether or not it's part of your booking systems, is definitely happening.
We enter in the last 4 minutes of a very interesting conversation, and I'm sure we can be more controversial and more, outspoken about it. But very final one, blockchain versus social media. Who is the next giant that will fight the OTAs?
I think that actually, I think the blockchain offers a really exciting opportunity to prevent wholesalers from unbundling rates and selling them on, because obviously the end rate needs to be secure, but I don't think that it will solve the retailing issue when they actually package things differently, and that's what sells it at the end of the day. In terms of social media, I think social media is absolutely key for hotels when they're thinking about their loyalty programs. Loyalty is sharing user-generated content through social media, but I don't personally necessarily think that social media is going to outdo. So when I say social media, I mean socially consumer-generated content. I don't think that's going to outdo or surpass the reviews on Booking.com or TripAdvisor. I still think they hold a lot more weight in terms of value. And if we're talking about ads on social media, that's a completely different story. But that's my opinion.
No pressure.
So, I mean, look, I don't think it's an either-or scenario. I think definitely the world is big enough for both to exist, if not an amalgamation of the two. I think our position on blockchain is certainly one of interest as a company, as Mark Zuckerberg announced in his January message to the community, to the world, is that we're definitely looking at blockchain, and we're definitely looking at what blockchain can bring to not just obviously hospitality, but to the world, and building the tools to help the community, come closer together, which is ultimately our mission at Facebook, and that refers to all of Facebook Inc. So Instagram, WhatsApp, Messenger, etc., Oculus, etc. So I don't think it's an either-or scenario. But I can pretty much guarantee that if what I understand of the travel industry, I've been working in this market for 10 years, and I still get the questions from very senior people about driving my likes and engagement on Facebook. So that's over here. This is the wrong thing to be asking. The right thing to be asking is exactly these questions on stage: is what's driving shareholder value? How is Facebook giving me greater margins of return for every single dollar that I invest in it? And that's the key question that should be being asked from hospitality companies and travel companies in general. So if that's what's happening on Facebook now, we're a 13-year-old company, and blockchain is very, very new and very misunderstood. I think what could transpire is a lot more confusion about the capabilities.
Great. Let's open to the audience. Any questions?
Hi there. I was wondering your thoughts on the opportunities for another kind of brand-led OTA in the likes of Roomkey, if you think that's something. I know much fanfare years ago, still around, but I'd be curious to see what you think the future prospects would be for such a similar endeavor.
Me. I think that Roomkey would, I think it was a great initiative, obviously, for those of you that don't know. Roomkey was obviously a brand-led OTA which didn't charge any commissions, that was able to buy and sell rooms on this platform. Now, I think that it was great, and interestingly, I actually think it's a really great idea for hotels to start thinking creatively about how they can actually share their customers. For leisure customers, you rarely get less repeat guests than you would do for corporate business. And what we've seen really interestingly with Shangri-La and Taj is that what they're doing is, in terms of their loyalty scheme, is they're sharing reward points. So even though they're not putting money towards rooms, they're actually able to get actual stays or days at the spa and things like that through that kind of loyalty system. I think it's important for brands to keep coming up with innovative ideas in terms of what they can be doing. And I thought it was a great idea, and it's a shame it didn't sort of get bigger.
I think
I have a question.
Sure. Sorry.
Noel from August Consulting. There is a big question here because the gentleman here, he was mentioning for the brands about their service and about the smile and about the check-in and about the check-out. I don't know whether my question is to the right panel, but I think this is an open question for everybody to think about. Because in hotel business now we see that the check-in and the check-out, it's coming all technologically. You check in, and now some chains are coming up that you can check into your room once you step out of the plane. And you come in, and you can even walk into your room using your phone. So what's going to happen to all the service and the smile and the check-in and the check-out?
It's a great question.
We're going into different directions.
No, it is a great question. And look, I mean, my own experience yesterday in the Loft, and I am an SPG member, I did exactly this. I checked in on my phone on the app, and I used the door to open the door with my app. And there was a queue of 4 people standing at the reception. I thought, this is the best thing ever. I don't need to queue up. So anything that saves me time, and time is ultimately all of us, our most precious commodity is time. Anything that serves to that need is fantastic. And look, the whole bot conversation is a big part of this as well. So what is artificial intelligence going to replace versus what it cannot replace? And I think that what we're doing in the artificial intelligence world at Facebook and bots is a mixture of the two. It's focusing on things which serve you better and serve the communities better and serve your individual needs better in an automated way, which takes out the stresses of that queue at reception. So I should be able to order my food literally without picking up. I hate picking up the phone. I'm sure others do as well. The one thing that if you ask millennials what they hate doing on their mobile phone the most, it's actually answering the phone. So they should be able to do as much as possible through technology that suits the needs of the individual. But I agree with you as well. Look, the lady that welcomed me in here made my morning. She gave me an enormous smile and told me where to get a coffee, because that's exactly what I needed. And that was that was phenomenal welcome. Technology is never going to replace that human touch. And I'm definitely now looking at Waldorf Astoria in terms of a weekend break at some stage, based on my own personal experience here.
Ladies and gentlemen, please help me in thanking both Emily and Mark. Thank you.
Great, thank you so much. And
Thank you.
Emily, just a quick question for you,
Yes.
because we've got the minnow, the startup company, versus the Goliath, the big companies, the bookings.com, et cetera, Facebook. I mean, how are you doing as a startup company? How many hotels do you have on your books? How are you getting on with price transparency so people can actually see the correct prices on the website?
Yeah, I mean, so we launched Price Check in January 2015, so about 3 years ago. And actually, the hotel industry thought we were crazy for giving OTA rates on the hotel website because parity is so important. But what we quickly realized is that actually this is so essential and does give visibility to the customers so they don't need to leave the hotel website to go back to an OTA to book. But yeah, it's taken off. We're live on nearly 20,000 hotels globally. As a business, we've grown from, I think, 20 people to 170 people. We have an in-house team of developers. A lot of our work and investment, we've focused on product development, but also data scientists to make sure that accuracy is so key.
No, for sure.
Yeah.
Okay, well, listen, I just thought I'd give a quick little promo because we're always about helping small companies like yourselves, Triptease, and I think what you're doing for the industry is absolutely tremendous. So if everybody can again thank our panel. Filippo, thank you so much for a very interesting session. And